And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Thursday. Welcome to my early birds. Having a little bit of issue here with the program. I thought we had this fixed, but we'll keep working on it. I think we're in good shape now. Happy Thursday. It is October the 28th. I'm John. Thanks for joining me and trusting me with your time. As always, we'll be looking at these markets, trying to put some context over them, looking for good risk management and patience at all times. Big economic earnings, session today. This morning at 7:30, well, at 7:15, I think, the ECB announced they weren't going to be changing rates. The quarter three GDP preliminary numbers came out this morning. And they are not looking good. They were looking for 2.7%. The economy continues to slow down. We are looking at 2% GDP for quarter three this year. So a little bit of a continuing slowdown of the economy. Not necessarily good news. But on the other hand, jobless claims are apparently the lowest since before the pandemic. They were looking for 290,000 initial jobless claims. It came out 281,000. Continuing jobless claims, where they were expecting 2,415,000. Came out a little bit better than that, 2,243,000. So while we do seem to have a problem getting people to work, it seems as though fewer people are claiming unemployment. So maybe there's a bit of a turn, hopefully, in the way people are earning their money and hopefully starting to get back to work. It's one of the most important things is we all contribute, right? So we are still waiting for pending home sales as well as the nat gas numbers. Pending home sales 9 a.m. Central. Nat gas numbers due out 9:30 Central. As always, we're just kind of glancing at the news. Apparently, there has been no agreement on the huge spending bill in Washington. Apparently, the president is going to go to the Hill today to see if there's anything that he can do to help. I'd like to see how that works out. Then he's going to the G20 in Rome and then on to the climate summit in Scotland after that. Seeing some mixed earnings this morning. Most of the focus, although it's a very long list of earnings, is going to be on Apple and Amazon that are both due out after the close. Crude prices are set to post their first losing week in 7 weeks. We've still got today and tomorrow, but it's looking like we're going to post a week to the downside in crude oil, which of course would be a welcome thing for everybody that puts gas in their car. So 4.3 million barrel boost in crude stocks, according to the EIA yesterday, and rumors that Iran may soon be allowed back into the world market as far as crude oil is concerned. So we're always thinking about what these markets are going to do, what's going to happen. We're well aware that there's a lot of concern and uncertainties out there. Anything can happen. Keep your ears and eyes open at all times, and make sure you protect yourself with a stop. Always wear a stop. We'd never know how any of these things, any new news, any headline news is going to affect the market. So make sure you protect yourself. We all want to be here to trade tomorrow. Make sure that you do Hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome, of course. Subscribe to our YouTube channel and hit the little bell so you can get notifications when we do go live. Taking a brief look this morning just before the forecast at the VIX, the dollar index, and the 10-year yield. VIX down about 2%, 16.56. Dollar index up slightly, 93.19, and the yield on the 10-year continues to kind of grind to the downside, 1.54% last I checked. As always, good morning to everybody. I always like to say good morning, Dennis. Janus, you win the prize this morning. First one in the room, Dennis Zalewski. Good morning, Vince, my man. How are you? Harry, glad you enjoyed this session yesterday. We had a couple of issues with some of the cameras from a couple of our presenters. We're going to iron that out, and we're going to be doing those again. So glad that you found it valuable, and hopefully, as did everybody that attended, you will be receiving a recording of that as well. Robert, good morning. Jason, Patrick, Harry, Nico, Jules. Haven't seen you for a while, I don't think. Thanks for popping in and saying hello. Alfred, Spencer, Angelina, Andre, Zoraine, George, good morning. Mike, Mikel, James, Rob T, good morning. Why Poppy, watching from Japan. Wow. Glad to see that you're here. Thanks for popping in, letting us know you're here and saying hello. Ricardo, good morning. Steven, Dan Trader. Three Lions Insight, Chase Gordon, Wen, and Robert S. Nelson Benitez popping in and saying good morning. I always love to say hello to everybody, and always love to see names that I haven't seen for a while that I haven't seen yet. Appreciate you coming in. Hopefully you're going to get some good information and some decent trade ideas and decent ideas for context, and we'll see how things work out for us. We've got today and tomorrow to finish this week's chapter in this year's trading book, and we're going to do our best to profit, right? Chase, good morning. Robert, Ryan, good morning. John, really hoping for a pop above the all-time high, long from a ways lower, but stop limit is getting tighter and tighter. Well, got to protect some of those profits. Sounds like you might have a potentially decent amount of profit in that. Michael, thank you. I am pretty good at slashing names. Michael, thank you for letting me know. Ja'Cory Bell, another new name. Glad to see you. And James, always a pleasure to see you. So, as always, we start with the daily and crude, no particular order. One bite each. Everybody knows the rules. Let's take a look and see what we're seeing. We talked yesterday about seeing a little bit of lack of continuation or momentum in crude oil. I think we got a little bit of help yesterday with the boost in EIA crude numbers, but the market has tested basically right to weekly kickoff low. We're going to see what things are looking like, and let's take a look. Okay. So lots of upside activity over the last 7 weeks, possibly the first week to the downside, as I mentioned, seeing, yesterday morning and times, a little bit before that the momentum to the upside might be starting to fall off. We might need a little bit of a pullback. Maybe we got a little bit too long. And it seems to be the case. Upside momentum has now proven that it is slowing by price moving in the opposite direction. We've got a test of the weekly kickoff low overnight. That's going to threaten market state if we find too much activity or acceptance below that line. Not looking for that, but of course we've got to keep that in mind. We've got open interest, which continues to drop, losing 5,700 in open interest on that move to the downside on higher volume yesterday. So looking like a little bit of profit-taking event happening yesterday in crude oil. Are we going to continue, or are we going to find a base and start to maybe range a little bit and then maybe move outside of that range. We haven't had much range lately. We're setting one up now. Take a look at the 30-minute chart. Okay, we were looking at this as a potential bull flag, which would have proved correct if we had accepted above it. We are now testing and looking to perhaps accept below it. What do we have? Settlement 82.66 settlement. The market kind of testing early the upper trend line here, rejecting, coming back down to test the trend line after the market closed, basically. Now we're just kind of looking back and forth as to what's going to happen next. We've got a naked point of control that we've just tested here in the regular trading hour session, provided we stay here and retest it. We're not quite open yet. We've got some overnight shorts that have reconciled and come back in and reconciled. I don't think that the short time frame is quite sure what to make of what's going on in crude oil. So we're going to be, I think, focusing more on gap rules. As this market opens up, we're going to see if we can't catch it and see if the opening range remains the high or the low. Gap rule. If we can't close this gap relatively early, I will look for a true test of weekly kickoff low in the regular trading hours session. Well, let's move on to the S&Ps now, and we'll see if we can't catch it and take a look at where the opening range is in crude oil. It might be an interesting one as we are opening out of balance. All right. So we talked yesterday morning about the high in the S&Ps yesterday. It's looking like excess. In other words, price got too expensive and was quickly rejected, even on the day time frame. That's what this looks like. Now, yesterday, on the continuation to the downside, we put in a late spike. We're going to take a look at that late spike here very shortly. Open interest increased on this down day yesterday. In other words, we added 20,000 estimated in open interest. That's newly created contracts on a downside move. That's sellers. Longer, shorter, medium, whatever time frame, we had some people coming in to bet to the downside in the S&Ps. We have an inside trading hour and extended trading hours so far. The GDP did not make much of an impression. Neither has any of the other economic information in the S&Ps. So we're going to be kind of looking towards technical and fundamental and profile information with which to look for our opportunities. So let's take a look here. Here's the 30-minute chart. Here's our rejection off the high. We did leave a naked point of control up there for us to look at, but we did put in the all-time high in regular trading hours. So the market is not going to be looking to take out any overnight all-time highs. Settlement all the way at the bottom here, 45, 44, 50. The market ranged, started to push lower as far as the day continued to the downside. And what we're looking at as a late spike is this last bar here. This last bar extended the range considerably to the downside and did not have time in regular trading hours to show acceptance or rejection of this level. Now, there's two levels for us to really kind of look for opportunities in and around this late spike. There's the high of the bar that created the late spike. Fred Decker is going to be very interested to see how this comes out. I've got this red line here kind of showing that the high of the bar. Then there's the point when the market began to extend the range. Now, this this break to the downside occurred before that last 30-minute bar. It started there. So I'm looking at this as a more important level for the base of the late spike. That level is 55, 58, 75. Look at where we are. We are hanging right around there. We've got some digestion to do before the open, but the late spike is going to be very important for us today. It's almost like the late spike started up here because this is the 1:30 or the 2 o'clock bar. Okay. And the market extended the range at that point. It started to accelerate up here. So this area between this high of the late spike and the base or the low of value from yesterday looks to be very important to me. Okay, the late spike rules say if we open in or below the late spike, the market is telling us that it's accepting lower pricing. If we open above the late spike, it's rejecting and leaving this as more of a buying tail than a range extension that looks like it may continue to go. So even if you don't participate in the S&Ps this morning, it's going to be an interesting opportunity for us to learn something about the late spike, about how the market is telling us one thing or if it's telling us another. We've got an inside day, okay? Basically, our entire overnight session is spent inside the late spike. Is this showing acceptance? Will the market open in that late spike? Big question. So again, even if you don't participate, watch it. There's going to be much to learn. I'm going to go back and see if we can check out how the crude oil open is going. It would say that looks like the opening range might be the low of the session. Here is the opening range. That's the 8 o'clock bar, low of it, the high of it. It's been left at the low of the session, ladies and gentlemen. It's going to be an indication of buyer control, but think about what buyers are there. We've got overnight shorts. The market basically taking some of those overnight shorts, freaking them out, having them buy into this, moving price back towards range, value, and settlement. But if this is purely an inventory adjustment from overnight and it can't close the gap, that's saying something. What doesn't happen and what does happen can be as equally important in markets. The market is attempting to close the gap and can't do so. Something else is going on. All right, let's look at the Nasdaq, which is a completely different situation than the E-mini S&Ps. Nasdaq traded to all-time highs again yesterday in the regular trading hour session. We added 12,000 in open interest on an up day, not a down day the way the S&Ps did. We settled above weekly kickoff high here, and weekly kickoff high in the Nasdaq is 15,574. So, more good signs in the Nasdaq than in the S&Ps. We continue to see this market continuing to move higher. Well, the tech sector has done very well as far as earnings are concerned. This is all making sense to me. There's no late spike in the Nasdaq, so that's something we're going to have to watch and something to learn. When there's a late spike in the S&Ps and not in the Nasdaq, what does that mean? Does it change anything? As the market turns, will the S&P and the Nasdaq separate? We don't know. Take a look at the 30-minute chart. All right. So we've got weekly kickoff high. We were able to hold it as support yesterday. We closed above it. First time settlement 15,587.25. New high in the December, all-time high, closed above the weekly kickoff high. Open interest increase Sure seems as though the market's been struggling to hold rallies throughout the day. I mean, we come up gangbusters up above the weekly kickoff high day before yesterday. We close below it. We go gangbusters yesterday to the upside, but the market falls, and we do manage to close above that weekly kickoff high. That's acceptance. When we're thinking about where price is being accepted, it's where it's spending the most time. We've got a lot of overnight longs in this market. Settlement, again, is 15,587 quarter. We've got the value area low very close to the weekly kickoff low. It's a very important area for us, okay? That weekly kickoff high, I mean, is 15,574. Important level. We've got a point of control here, which is, well, we know where settlement is. Point of control, 15,630. It's the high volume node. No real high volume nodes up here. A little bit of a high volume node down here near settlement. But when looking at the fact that we've got an awful lot of overnight longs in this market, what they're looking for on the U.S. regular trading hour open is new buyers, new business to come in and continue to perpetuate their price to the upside. A lot of weaker hands longs. If that doesn't happen, the market should give us an opportunity to buy the market on a weakness at some point today. We got our overnight low, pretty close to settlement, pretty close to the low value low, and this whole area down here just looks like it's full of fish if we get the opportunity. So Kenneth Powell, when do I set my weekly kickoff levels? For example, are you doing this on Sunday evening when futures open? Or are you doing this after the Monday session? The weekly kickoff levels I do usually on Friday after the close. And take a look at what's happened. I go into the long time frame, the medium time frame, the short time frame. It's a combination of technical analysis, market profile information, and a little bit of math, and sometimes a little bit of luck. So those are really set after the close on Friday. We put them out on the weekly kickoff email on Sunday. Only 4 of the products are added to that. S&P, gold, crude oil, and the 6E, the euro. So, but these weekly kickoff levels are not meant to envelop a weekly range or something like that. They're areas that I view as important levels for longer time frame traders to kind of be pushed into adjusting inventory. So whenever we are trading, we're thinking about, who our direct competitors are, who is in the marketplace. And anytime we're around a weekly kickoff level, I'm peaked looking for information or evidence that longer time frame traders are indeed making adjustments. So yesterday's high volume nodes for the Nasdaq is settlement 15,587 and a quarter. We have point of control, which is 15,630 basically. And those are really the 2 high volume nodes. We don't really have too much as far as high volume nodes at the highs. So hopefully that's what you're looking for there. All right. Okay. Where are we? Now we're on gold. Okay. Well, we've got, as discussed, we're in a long time frame area of balance. We've been kind of volleying back and forth between the highs and lows. We're relatively centrally located in that, and we're expecting short time frame control. Guess how many contracts we added or lost as far as open interest is concerned yesterday? Estimated we lost 50. There's nothing that says short time frame control better than a very small change in open interest. Our lower trend line held for us yesterday. And open interest, moot. It's been kind of up and down for weeks on the grind to the upside. We've been adding and losing, adding and losing, adding and losing open interest. Nothing substantial as far as any accumulation is concerned. So again, we're really looking at short time frame control here. Short time frame control meaning short time frame day traders, medium time frame swing traders, smaller to longer time frame and bigger money speculators, but I don't see that there's a whole lot of hedging going on. And with the information that's going on, everything that's going on in the world, it's something we look for is to see when we have our longer time frame beginning to hedge. Haven't been seeing that much lately. It's been a tough market here in gold. What does that mean for us today? How's that going to help us? Well, overnight, we had some mixed overnight inventory. Before the number came out, we had a big push up to, guess where? 1809. This 1807 to 1809 level has been a level that's been on my radar here for quite some time. We got to the upper extreme of that area within a tick of 1809, and we've come back and we've traded all the way back down to settlement. That, my friends, is an inventory adjustment. We got too long. The number came out. It wasn't what we were looking for. Whatever it was, the short time frame long said, all right, that's all right. We're out. We're taking the market right back down to settlement. So we've got higher lows and higher highs in medium time frame. When the market offers us opportunities to buy at weakness, we buy at weakness. The gap close and the inability to accept inside value from yesterday makes the range high of value and settlement all right in this area here a target rich environment. There are fish here. Whether those fish are buying it and having the market then continue to move to the upside, I think we're going to have a little bit of trouble up here. Or if we accept back inside value from yesterday, then we can probably look for a move in the opposite direction, which could take us all the way down to the low of value from yesterday. So whichever direction we're going, I see fish at yesterday's range high, value high, and settlement. Settlement, where is that? 1798.80. But be patient. There's not a whole lot of participation in longer time frames in this market. If you can catch your competitors too long the way we did after the open here, then we can catch that move when they unravel. Right now, we're back to even. Stay patient. Short time frame levels have a tendency to be respected in short time frame control. Think of that. High of the range, value high, settlement, overnight inventory straight to it. It's a pretty good opportunity. All right, let's take a look at these last three, and we'll get down to business. All right, the euro. Okay, 4 days here of a relative balance, maybe 1, 2, 3, 4, 5, 6, 7, 8 now in a larger area of relative balance. Yesterday on this higher volume day, but still remaining in value, we lost 2,800 in open interest. It's a lot, sort of like gold. We're in an area that we've been in for a while. We don't have the months of range-bound activity, but we're centrally located inside weekly kickoff low and weekly kickoff high. A lot of this is going to be, of course, related to the dollar, or it seems more related to the dollar is the euro than gold. Seems like everybody's talking about the cryptos. So open interest lower on higher volume on this drop to the downside, but an up day. Range bound rules apply. We've kind of broken out above the 2-day balance area. Now we're looking at a larger balance area. It's going to be a tough trade, I think, today. Hang on a second. Let's look at the 30-minute. So something got into this. Maybe the dollar is taking a little bit of a nosedive after the GDP number. So we didn't really have, let's see. Well, we had some overnight shorts. Settlement was up here 116.1950. We were certainly testing the bottom end of the 3-day range that we see a little bit more clearly on the 30-minute chart. We've broken out of that 3-day range. And if we spend time up here, we're going to look to continue the move to the upside. If we reject and we fail and we come back and re-accept inside yesterday's area of value, that might be telling us that we're getting a little ahead of ourselves as far as moving to the upside. We got a naked point of control that we've yet to check right up here, and that's definitely a visual that the market is seeing right now. I'm going to be patient here. I'm going to be watching. We know that we've got another area of resistance up here in the fact that we've got, an area of balance here, area of balance here, area of balance here. Are we heading back to the upper area of balance is really the question. It's going to be hard to find good trade location. This point of control looks like an interesting spot to try. Why? It can help us limit risk. Limit risk. That's our goal. First, limit risk. Second, make money. Seems strange, doesn't it? All right, here's the 10-year. Rates continue to slip. We had a breakout yesterday on above the potential bear flag. We had a bear flag here that worked, a bear flag here that worked. Not too sure about this one, but of course now we're right back in it. Open interest. We lost 40,000. Think maybe we had some shorts in the hole here that got out. That takes buying power away from the market, and look where the market's headed now. We've got an inside day in extended trading hours. Take a look at the 30-minute. All right. So here's our breakout. Here's settlement, which was all the way up here, 131 and 5.5, 30 seconds. Market showing rejection of that level now. We've got a lot of overnight shorts in this market, but it seems as though those shorts are being emboldened by regular trading hour session traders. Where does this give us as far as opportunity? Well, let's extend this. Okay. We've got 1, 2, 3, a bunch of points of contact on this. Acceptance below this would be an acceptance below a bear flag. That's what we would expect in something like this. Are we seeing it? We looked below. We didn't take out yesterday's low. We're wrestling with yesterday's value area low. I'm not sure I'm ready to barrel into this short just yet. Seems like there's some decision making going on here. Hang on a second. Here we go. Net gas. Or the net gas, yeah. 10. Here's the daily. So we're inside a 2-day balance overnight and so far in regular trading hour session. Open interest lost yesterday on an up day, 6,400, losing an open interest. That's total number of outstanding contracts. That's people getting out of this market on an up day. I think that's some short covering perhaps from the move back up to this level. We're holding above weekly kickoff high, which I find, important for continuation to the upside, of course. Rumors are that there's some potential relief for the European situation by Russia. They're talking about, Russia's talking about, improving the ability for them to sell nat gas at $6 to Europe. Isn't that magnanimous of them? But apparently they may be getting some relief from the energy crisis that's currently going on over there. Anyways, back to U.S. nat gas. 1, 2, 3, 4 days in range. We're kind of testing the lower end of that range right now. Take a look at the 30-minute chart. So kind of opening inside Yesterday's range and value was a suggestion for some patience. Here's the 3-day area of balance that we've really kind of been in here. Today's day 4. Weekly kickoff low has been supportive the entire week. If we get the chance, it's a good way to limit our risk. Don't forget we have the EIA nat gas numbers due out at, what is that, 9:30 or 10 o'clock today? What time is that? 10:30, 9:30, 10:30 Eastern, 9:30 Central. So we've got that to kind of watch. The extremes of this area of balance are where my focus is really going to be. I'm not looking for anything in the middle. If we can find support here, find resistance here, good. If we break out, we go with it upon acceptance. And acceptance is, again, a subjective term. What is acceptance? It's time, momentum, participation, and volume. Sometimes these things happen too fast for us to catch. So, Ryan, I don't know if the Nasdaq will go higher. I wish I could tell you that. I wish I could tell us all that. Just one day, I'd like tomorrow's paper today. Here's where the S&Ps are going to close. Here's where the Nasdaq's going to. Here's gold. Here's crude. If we knew that, we could have one trading day and be happy and rich the rest of our lives. But I can't do that. I don't know that stuff. Thank you, Michael. My perspective is helpful. That's what's important. We did do GC. Can we do a video on it? It's like a specific video for gold. Something that I appreciate the feedback and the thought, and something we can work on. Fred, hey, good morning, Fred. Good call, lower the crude oil yesterday. Good. I hope you're able to take advantage of some of the things we were talking about. Ryan, I'm glad that the insights are helpful. If you find yourself reluctant to trade unless you've watched, to give you confidence in the levels I'm looking at. Well, that's very nice, Ryan. That's, I'm just here to try and help, doing the best I can. Mason, thank you also very much. All right, take a deep breath. We all can do this. Anybody can. Just make the changes, take the time, and grow. Grow. That's what this is all about. Grow. There's an opera. I know that there was a, what was it? Was it with Rod Serling? What was that show? God, it's on the tip of my tongue and I can't think of it. But one of the programs is, guy wakes up and sees his obituary in the next day's paper. Yes, you can all do this. Harry, my pleasure. All right. Humble, grateful, creative today. Be patient. Risk management first. Always use a stop. And we'll talk tomorrow morning. It's the next time I'll see you. God, it's going to kill me. As soon as I, Twilight Zone. Thank you, Fred. Oh my God, that was killing me. Oh, I must be getting old. And a lot of folks watching this probably have never seen The Twilight Zone. What a great show. Get out there and profit today. Have a great trading day. Trade well. See you in the pit in a couple of minutes. And then I'll see you again tomorrow morning. Let's have a great day.